Welcome to Roscoe's Powder Coater podcast. I am your co-host, Kim Scott. Our weekly podcast interviews influencers in the industry and covers trending topics so powder coaters can effectively learn and grow their business. This week's question: how do you track money generation? Are you a money maker or a money breaker? Today's guest is the owner of a company that supports you with the best strategies for the financial side of your business. She is an accomplished QuickBooks expert and has many years of experience and certifications behind her, which she brings to today's interview. But that's not all she's brought with her, as you will see. So let's get ready to level up your powder coater game.
So who are we talking to today? We are talking to Linda and Steve Schilling. And Linda has been in the accounting industry for, I guess, 30 years now, right? Is that what it's,
Just
maybe more or less?
More than that, we don't want to date me too bad.
And of course, everybody knows Steve on the group chats and forums and stuff like that, Deep Stage Coding. And you have also started your own YouTube channel, which I've listened to every single one and or watched every single one, and it's a challenging thing to do, and I commend you for it because they're turning out really nice. I like what you're doing.
Not just with the YouTube, but with the powder coating part of it. I'm just starting out myself. I'm learning, and watching the YouTubes is helping, and I'm not trying to be an expert. To be honest with you, I go back and watch at them and say, okay, you screwed up there. Fix that next time. So
it's always a learning curve with digital technology, right? And platforms and stuff like that. And sometimes it's like powder coating. Sometimes you just need to get in there and make some mistakes.
Oh, I'm good at that.
It's so funny not to get kind of sidetracked with powder coating, because we're here to talk about accounting and some of the other stuff that, other business topics. But, these guys that come on and ask questions on the Facebook groups and stuff, it's like they're just so afraid to make mistakes. And I think it's really important that the community kind of gather around them and say it's okay to make a mistake, That's how you learn faster, learn better, learn everything, and learn it for yourself. One of the things that grabbed me about the last podcast, which was the one with Ashton Palmer, was that's how he learned. And it's hard, it is challenging when you're working on such a big project to be making a huge failure like that if you're doing like really big stuff. But at the same time, it shouldn't, you shouldn't be afraid. You should just get in there with confidence. And if you make a mistake, own it and learn from it, because you are that electricity that binds you to the gun and the object and everything. It's all part of that. It's all part of your own energy, right?
I had never heard of Ashton until your podcast, and I immediately went to Instagram and started looking at his stuff. And oh man, I hope I can be as good as him someday. His stuff is fire.
It is, isn't it? Yeah, and I think what amazed me so much, what amazed me about that interview was that when he showed you some of the bigger projects, like the mentality it takes to go from, and when you're a batch coder or you're, custom coder, we don't necessarily specialize like he does anymore, but like you're taking on big jobs and you're taking on like the rim jobs, and there's two different mentalities or mindsets. And and protocols that you do with these large jobs versus these small ones. And I hadn't ever thought of that before. My husband, and it kind of created a lot of conflict because I'm like saying yes to everybody, come in the door, come in the door, come in the door, but not really thinking about how you have to approach a project like a gate or a railing differently than you do something delicate like an automotive part that requires taping and some more detail work. So good lesson for me to learn too.
Right.
But
she's nodding off because
yeah, I know.
I spend the time in the garage. She spends the time in here with the 10 key calculator and customers' files and stuff. So, and she's the one we're here for, not me.
And it's not any different in my field either. I mean, there's a difference between a startup business and one that's been established and working for 10 years. And even still, they may not have their books together correctly. And to come in because they've either outgrown their system or they've gotten somebody in there who's really made a disaster of it. Yeah.
Yeah, that's me. But yeah.
It happens a lot. Would you like me to tell you a little bit about what I do? And
yeah, I would like to know more about that for sure. Get going.
I'm known in the corporate world as a controller or probably more of an assistant CFO. Okay, so I'm operational and strategic. Okay, in the business, I'm not just tactical, which is working on a keyboard all the time.
Mm-hmm.
I help the business owners to make decisions with their money. But in order to make decisions, we have to have good books. If we don't have good books, you're relying on bad information to make decisions, and the failure rate is a lot higher. So that's what I do. I've been in business for myself for 9 years. I worked in corporate for well over 20 years. I'm not going to tell you how many.
Wow.
But I managed a $70 million business, here in Indiana, and worked, all the pieces of the puzzle in my life. So what I do is I come into a small business or a larger business. We determine what they need and set them up. If they want to have somebody work the books and then just use me for consulting on the side, I will train that person how to use that file.
Mm-hmm.
And how to, charge things and where to put everything. So we come up with a process that works for the business. So there's a system in place. And then everybody follows the system, and then the business owner can make better decisions. The one piece of the puzzle of business that most business owners overlook, and it's because they're not familiar with it, is accounting. It's actually the management side. They're so busy doing things and guiding people and training and acquiring products and selling and selling and selling. They're trying to do everything. So that piece always gets put off, but it's a huge part of the business, because you don't know if you're making money. Why are you even doing it? You can't tell by what cash is in the bank how much money you're making.
It's a three-legged stool. You've got production, you've got your management, and then you've got your finances. And you have to have all three, and all three have to be equal, or that stool's going to rock back and forth, or it's going to fall over.
That's a good point. Definitely. And yeah.
I'm marketing in dirty hands.
Yeah.
Which is fun, because when I first met her, I was working retail, in charge of a mobile retail store on the NHL circuit. And she worked in the accounting department in the same company. And during this one large event every year, they always take people from the company and they make them work in the stores so that they get an idea what the guys out in the field do.
Yeah.
I had this standing rule that people in the accounting department did not touch my money. They didn't work registers. I put them on the floor and made them deal with customers.
And I got put in his store.
She came up and, I want to work a register. And I said, no, you're working the floor. Accountants can't touch my money. They don't know. Accountants deal with books. They don't deal with real money.
Yeah.
So I put her on the floor and she hated me. But
Well,
halfway
see,
through the
my
day, she ended up on the
weakness
register
is
anyway.
The marketing side, and that actually is very common for accountants. We're not very good at selling. Why do you think we choose to sit behind a computer? We don't have to go out there and interact and try and sell a product. So, yeah, it was kind of interesting.
That's a great love story. I love that story.
I ended up on the register anyway because I really look like an idiot out there on the floor.
I needed somebody to work the register.
And of course, in my own business now, I've gotten much better and much more, much more out there than I used to be. So I have that third piece of the puzzle. Pretty well down now.
I mean, our company took a pretty hard hit this year. I'm not gonna lie.
Most of us did. Yeah. Most did.
And, prior to that, 2019, 2018, 17, I was trying to juggle as much as I could and really started to get into aside from the day-to-day, I did the day-to-day with QuickBooks and I still do today. I've got a little lax, I have to admit, because we've just started so many other products. The podcast takes a lot of time. We moved. There was just many things to so I'm a little actually embarrassed because I'm much more on my game in QuickBooks and stuff than I have been in the, than I have been in the past. But
well, acquiring business has become far more critical because of what has gone on. Getting out there and selling, marketing, in order to be able to even get to that point where you can actually sit down and figure out where you are. You need cash coming in the door because you're starving right now.
Right.
And
it's a big vacuum.
That happens to all my clients.
And, but I was really kind of proud of myself because for the first time, we were actually relating sales, marketing, and accounting. We were having that balance where we could look at the numbers and we had formulas in place. We could, input all of that and it could weave a story. And that's where I really like how the accounting can transition into this marketing story. Or sales story or this company story, because that's where you can really make strategic decisions about your business and where you're going. Other than that, we're just marketing and throwing stuff up on social media thinking, oh, a click is worth this or a click is worth that. It's a lot of effort and not a lot of return and stuff. So that's where you can really kind of dive in. And once you get that, you tease that story out of the numbers is where you really can get real with your business, and where you're taking it, where you want to go.
The biggest, I think, hang up that most people have with money is they look at it as, I hate math. And unfortunately, the way our schools have taught us math, has been really unfortunate because math is really truth-telling, and it is it tells a story, and it's basically logic. It's not so much. I don't sit. I'll have my calculator or my Excel, and I'll do my adding and multiplying, whatever it needs to be done. But that's just such a small part of it. It's really looking at the numbers and saying what happened here this month. Why did this happen? Why did that happen? It tells a part of the story, but the team also tells the remaining part of the story.
Mm-hmm.
So it's like, okay, so what happened? It brings up questions. How can we do this better? How can we capitalize on this opportunity, because we got this opportunity on the doorstep, and how can we get rid of the things that aren't serving us? So,
right.
and
Yeah.
that's what your reports do. And there are 3 of them. You had asked some questions about some of them. You want me to go ahead and start talking?
Yeah, let's, where do you want to start off?
Let's see. Let's start off right with the different reports. Okay, there's 3 reports you need every single month. My clients typically get between 8 and 20, depending upon what they're tracking.
Okay.
So you have your balance sheet. You have your profit and loss, which is, as accountants know, that is an income statement. And then you have your cash flow statement. Okay. Your balance sheet tells you what you own. That's your assets. What you owe, which is your liabilities. And what is your skin in the game, which is your equity. What have you put in and what have you taken out? And what have you made in the business? So those are the 3 parts of the balance sheet.
Okay.
Then you've got your profit and loss. And I'm going to call it profit and loss because that's what QuickBooks calls it.
Yeah.
They were the ones who really started that, and really they should know. But anyway.
But in a lot of worlds, they call it P&L.
P&L.
That's what they think of. So.
Right.
Anyway, so your profit and loss tells you what did I make as far as what was my gross revenue. Okay. Then what did it cost me to produce that? That's your cost of goods sold. And then your operating expenses, and those are what keeps the doors open. What is your rent, your utilities, your office supplies, all that kind of stuff. And it brings you down to a bottom line of what I really made in the business. We track percentages more than numbers. I mean, I look at percentages. I don't necessarily go and look at a number. I'll look at a percentage and say, is that a good percentage for this business or not? And compare percentages. And that's what you call a common sized financial statement, where you take the percentages and you look at those. It puts it into perspective of something you can compare, because you can't compare numbers because they go up and down. They fluctuate. But so that's your profit and loss. Then you have your cash flow statement. Your cash flow statement says, what did I make and where did it go? Did it go into investing? Did it go into financing or come out of financing? Or, I mean, what was and it's only cash, it's not income. And that's where it confuses everybody.
Yeah.
Because it starts off with income, but it's not about income. It's only about cash. Where did the cash go? Where did it come from? So those are your basic 3s. Now there's all kinds of other reports, but if you're not getting those 3 every month, you need to sit down and figure out how to do that, because those are going to tell you what you're doing and what's going right and what's going wrong.
And if you're not understanding them.
Yeah.
I mean, people with QuickBooks Online can print them out, but if you can't understand them, they're useless.
Right.
That's true. The one that I'm most familiar with is the profit and loss, just because it's related to taxes and stuff. And so I think that that's a myth, or it's not a myth, but like, I always geared it towards the end game for me was, okay, what are my write-offs or what do I not, like towards my accountant, it's like, that's what I would focus on these reports for, is just the profit and loss. Is just like, okay, what do I need to get that lower tax bracket, or, like to get that next write-off kind of thing. And that's good. You should focus on that, but you should also, but that doesn't necessarily amount to or equal to profitability, or whether your margins are in normal, should be. So I do want to talk about normal margins for powder coating if you have that information. I know Steve's just getting started, but one of the reasons why a lot of people get into powder coating is because, it can lead, it can be a very profitable business.
Trying to think of, because I was going to hold up an example. Okay, so what is a standard? Okay, you have your revenue, you have your cost of goods sold, and then you have this one little line that says gross profit. That's before your operating expenses. Your gross profit will fluctuate, very little, really, because that's what it costs you to produce the product. Only if you have some certain situations that come across where, maybe you had to have extra labor,
Right.
and pay for extra labor at a higher rate, like subcontracting.
Or compressor broke and you had to outsource your blasting for a certain period of time.
Right. Yeah.
Those kinds of things. But it should be pretty stable, and it should range for a service like you guys are doing. It's considered manufacturing. So somewhere between 40 and 50%, somewhere in there. Service industries are usually a little higher. You'd have a gross profit of 60%, which means your cost of goods sold was only 40%.
Right.
Okay. I'm not sure what the powder coating average is. Never even thought of looking it up, but I would say somewhere in the 35-40% minimum area. Because there's not only there's materials, but there's a lot of labor in there too as well. But you can look at percentages like that, but then you also got to remember you got all those other expenses down below that you got to use to cover. That it's got to cover all of that to be able to make a profit. Your operating expenses should probably be no more than 25-30%.
Right.
Okay. Your rent, your utilities, office supplies, administrative salaries, and then brings you to a bottom line. I would say a good, healthy profit in your industry would be 10 to 15%.
That's what I was thinking. That would be. I think I think you're right on there. Actually, it's what it should be. We've always tried to achieve that. I think where we kind of got a little buggered up was when we added that employee and then we paid him too much, not knowing where to start. But then, it's so hard to even hire someone here for $20, like to even have them show up. Making at least 20%.
The cost of living on the islands has got to be phenomenal. I mean,
it is. I don't know how these other businesses do it, to be honest with you. I mean,
and for all the headaches that employees cause, they do cost a lot. I had an employee. He was a good guy, a good employee. I decided not to go that route because I was spending all of my time training and overseeing and doing the administrative stuff. I'm much happier doing solo.
I agree, and I think that
I may not grow past a certain range because there's only me, but I'm happy that way. And not everybody wants to grow.
Well, as a powder coater, you're in control of the end product, and your reputation is on the line. There's a lot of reasons to not add an extra person. I noticed that we went. It's an art form. I mean, it is. Doing is art, and it's not easily replaced. Unfortunately, it's not respected as art, but yes, that's kind of what the problem is we're trying to, I think, ultimately, especially with the directory, that we just launched, is, to educate that consumer that it is art.
I think that's
especially when you,
really great idea too.
Yeah, we're gonna probably talk about it soon. I just haven't found the right slot to talk about it, but I think it's coming up. I'm gonna get Danielle Miller on the line, and her and I will talk about that later. But yeah, I mean, it's just educating the consumer. I think once consumers can get that in their heads, they'll pay more for, so this wall that powder coaters keep running into is just, to me, an educational problem, or something that can get resolved with creating and crafting a new understanding through marketing and sales. Yeah. So hopefully the directory will accomplish that.
Well, and there's the thing that people want to, when they're building cars and things like that, they always figured that liquid paint was the only place that was custom. Mm-hmm. And powder was what the guys did because they couldn't paint. And there are powder coaters out there that are producing flat out artwork. I mean, I see pictures of stuff on Instagram and on YouTube and on the pages, and I'm just, that's sick. Mm-hmm. Yeah. And that news, that's got to get out to the communities, to people out there, so that they know that these people, they are artists. They really are.
Yeah. And I'll tell you one thing that I don't know if you follow Powder Works on Instagram. So shout out to Powder Works. They're out of Calgary or Canada. I know they're out of, I think it's Calgary. That guy or those guys, they post, it's a different rim and a lot of black, but every time they post a black rim, it looks like artwork to me. I don't know what it is. It's such a simple post. It's just, sometimes they'll tell a story and put multiple slides in there and stuff like that. They could post a black rim every day, and every day it looks like something new I've never seen before. And I just a shout out to them, because if you don't follow them, I think you should, because there's something they're doing right. It's so straightforward and simple and beautiful in and of itself, Awesome. They're not trying to be like Roro or Blast Coatings or any of the other, GTZ, all those other guys, and Static Coatings too. They're just doing the simple rim with the simple color. The other day yesterday they did red, which was like, oh, you never do red. You always do black, but they're telling a story, and it doesn't matter. They just get a million, they get lots of clicks and likes because of that. It's just a simple story,
If it's quality, it doesn't matter what color it is.
I think that's what it is. It's just like, it's a flawless rim. And that's what they're trying, that's what they're capturing on their camera, or in their image. So anyways, moving on. Yes. So I think we can all agree that a good percentage of profitability percentage is between 10 and 15%, right?
Yeah.
Yeah, I think that's totally ideal. And that, it's good that we're kind of establishing these things, because, I don't think anybody, it is such a rare bird, powder coating and manufacturing. I don't know. I mean, a lot of these industrialists already know, or generational powder coaters, they know that stuff, but they're not sharing it with us, right?
Right.
So it's good that we're just establishing these answers today on this podcast.
Now, there are ways that you can boost that bottom line. I mean, obviously, keeping track of your money is really important, because there are things that you can deduct as a small business owner that you can't deduct as an employee. So when you're comparing the fact that, oh, geez, I was making $75,000 a year in my job, but this business is only producing 25 for me, then you go back and you look at all the things that you get to deduct that you couldn't deduct before.
Right.
And you're going to find and mentally add those back in. Well, I got most of my cell phone paid for. I got mileage paid for. I got, I'm part of my office that's in my house is deductible. There's so many items that you can boost that bottom line. But
if you're
technically,
you can write off part of your garage if you're doing that, or if you dedicate the
Good
entire
point.
building, you can write that off. And that's the electricity. There's so many things that you have that option.
you do have to be careful about businesses on your home property though, because you can lose your homesteading exemption. So you have to be very careful.
That's going to depend on the state.
Yeah, it depends on the state. There's, it depends on, it depends on actually not even, well, it depends on the state, but it also depends on your locality. So you got to know the rules of the game before you start or as you begin to start. Find out everything you need to find. The way to do that is really to see a CPA. And a good CPA will have a list for you. This is what you can do. This is what you can't do. This is going to get you in trouble. This is going to keep you on the up and up. And just spend an hour in a consultation and find out everything. But when you make the appointment, make that appointment and say, I want to know what I can do, what I can't do. I want a down and dirty meeting so that you're only paying the $150 or $250 an hour, and you're doing it for 1 hour or 2 hours if you have to. Get it all up front so that you know the rules of the game, because you will shift your thinking in your purchases and how you proceed going forward strategically with your business, all based on those rules. And that's what I do is I go in and I teach my business owners. This is the rule. This is the rule. This is the rule. This is the rule. So how can we make this a deductible item? How can we justify this? Because if you can justify it legally, you can take it on your books. Now the IRS may come back and say, yeah, we don't think so. And that's where you hear these cases that come up, and some of them win and some of them lose. But having that justification, this is the business purpose of this particular thing. I was marketing or I was advertising. It looks like a charitable donation, but I had a table out there. I had my business cards there. I had my marketing materials, and I was selling at the same time, even though I gave a charitable donation to this place. It was more of a table rental. There are all kinds of different ways to justify things. I've run into a lot of situations. Sometimes we have to run and buy a CPA and say, technically, can I do this? And find out, because you've run into all kinds of things.
Yeah, because I was thinking, like, when I first started, I don't know, I just get these things in my head, and I think I just sometimes assume things. And I was thinking, I need to make a certain amount of money before a CPA will even meet with me. You know what I mean? Like, if you're just making...
CPA will take your money. The CPA will take your money.
I'll take your money.
He's going to take your money.
I guess so, I just felt like I had to make a certain,
If you don't know the rules, you're going to lose money. You're leaving money on the table.
Yeah.
A good training, you can get books. There's Sandy Botkin puts out some good books. I don't know if I have his book up there, but I've got a bunch of them. I get them and I go through them and I look at them and I find different strategies that people are using. And some of them blow my mind, because I go, wow, I didn't know that was deductible. And here I've been in this business for 30 years, that works.
There's a Costco.
Oh, yeah, but I don't. Yeah, well, actually, I took a training course with these people, and it was a good course. That's what all those books are up there.
They may be on one of your other bookshelves.
Okay.
So
I read a lot.
Okay, let's switch over to accounting software. So let me tell you my story here. I bought QuickBooks 2007.
Okay. Okay.
Then and said, I need to get an accounting software, because prior to that, of course, this was before we got into powder coating, but seriously, we were still refinishing furniture and doing interior design and stuff. So of course the need kind of presented itself. And then it promptly sat on the shelf for 4 years, or at least a good 3, before I actually drop the little CD in my computer and upload the application. So that's how like my head in the sand I was with accounting software.
That's how everybody is. And
yeah,
you've been told by Intuit that you can do it yourself. And I'm here to tell you, you can't. If you don't have any accounting experience and you don't have any knowledge of how an accounting system works, you can't do it yourself. Now, you can get somebody like me who goes in there, sets it up for you, sets it up properly.
Well, that was mistake number one because I did it wrong. Yep.
They have this wizard, okay? This wizard is like the most basic thing you can possibly imagine. But you get somebody like me in there, and I have a file, I upload it, and then I just go through and I delete the accounts that I don't need for your particular business, or add the accounts that I need.
Yeah, there's so much in there I don't use or need, and it just bungles up, and it just makes it even harder to sift through what I need when I need it. And
then you need somebody to teach you. Now, I've trained people in anywhere from 8 hours to 16 hours, and some people will never catch on.
Mm-hmm.
But 8 hours to 16 hours of training is what it really takes, because you need to have hands-on experience. Just like anything, we are doers. We're creatures of habit. So you teach them the habit, and then they can do it on their own, and they will run into minimum problems. And then at the end of the year, have somebody look at the file before you go and submit it for your taxes, because you could have a whopping error in there.
Yeah. I pretty much like handle my own QuickBooks, but then I have a bookkeeper come in and check me to make sure that things look.
Is she certified?
I think so. Certified.
Worked for a long time. I'm a certified bookkeeper. I'm a certified QuickBooks specialist. I'm certified. What else? I'm certified in zero. I have a bachelor's degree.
Wow, that's crazy.
I have a lot of experience.
Right. So that's a good question to ask then. It's like,
well,
I mean, she's one of the only bookkeepers on the island, and she's one of the largest, and she comes, she's probably yeah, I'm pretty sure she works under a CPA. So she's got her, so she's.
That's great. That's exactly.
That's a good sign, right?
That's a good sign. That's a really good sign. Yeah. Now, my advice in choosing somebody to do your books is to see if they're certified. If they're not certified, I'd be really careful, okay? You can get a certification very easily. You go to the AIPB, you pay a fee, they train you, and they give you a test, and boom, that's it. And it's really not that expensive. The AIPB is the American Institute of Professional Bookkeepers.
Mm-hmm.
So they can do that. They can get certified. But they teach them taxes. They teach them how to record things. They'll teach you all kinds of stuff. I'm not sure what their current curriculum is, but I looked into it years ago, and I still get I subscribe to their newsletter. So I get any updates that come through. So any new laws that are passed, new ways to do things, I find out right away.
Yeah. So that's okay. So that's an okay strategy, right? What I'm doing, we're just doing the data entry ourselves. We're making sure that we're reconciling every month, all accounts. So that includes credit cards and checkings and savings accounts. And stuff like that. We do also have within QuickBooks, just because of my rate is so good with QuickBooks, we actually have our credit card processing and merchant account with them as well. So we have it on the iPhone, or his phone is Android. So we have that all connected, which is nice. It's convenient for me, because if I were using Square or Stripe or some of the other, then I'd have to import it and stuff, and that doesn't always mesh up with, QuickBooks doesn't have really good API software.
Right.
So it works for me. And they try to keep it seamless. It seems to work, and their rates are pretty affordable. I'm not recommending that for everyone. It just happened that I got a good deal, and I'm sticking with it until things change. But there is a learning curve to QuickBooks. I don't have QuickBooks Online. I have heard, I can understand why some people will go there and do that. But personally, for me, I don't mind people seeing, I don't mind platforms being able to see social profiles or where I'm searching online. But when it comes to my personal financial stuff, I have a real big issue with that. And that's why I use the desktop version.
I think one of the biggest issues with QBO is if you mess things up, you can't go back and fix it.
Well, you have to fix it. Well, you have to. Typically, you'll hire somebody like me to go in there and fix it. Because
that's a good point.
But the desktop has the capability of making a backup. So you make a backup before you go and do this silly thing that you're thinking of doing. And then if it doesn't work out, you can just restore that backup. That's the thing about the desktop.
I actually pay for the data, what is it called? The QuickBooks Intuit Data Protect. I actually pay for the Data Protect. And it's just because I do so much all over the place. Like I got stuff for Dropbox. I do triple backup, but I like the Data Protect. It's kind of one of those catch-all things for my, because the Data Protect doesn't just protect the QuickBooks files. It protects the whole backup. It backs up the whole computer. So it could be your desktop or your files within Explorer or whatever. It's everywhere, which is nice,
How often does it back up?
Every day, except for it's broken right now. And I think it's broken because I've hit my limit, and I host all of my, I've got all the, the video files on my desktop from the podcast. So it's, so I got to move that off and get it into Dropbox so that I can free up all this data, because I think I've exceeded. So now it's stopped backing up, but I know I can fix that. It's just a matter of moving the files.
But even still, you have the capability to back up every minute if you wanted to. If you wanted to go in there and play with your file and test it out and see, well, can I do this better? Or say I want to connect it with something outside, okay, and it doesn't work, I can undo it.
Yeah.
You can't do that in QBO, and that is its biggest weakness. And that's any online software's biggest weakness.
Yeah.
Live.
Well, it's funny because technically software applications can be undone. You just go back in the history, right? I've built a few apps myself, and I know I can do that. But
I use a really great piece of software called the QBox. All of my QuickBooks software files are in the QBox. So every time I close it out, it syncs up to the QBox right on my desktop and online. Okay. Now, it doesn't sync the entire file. It only syncs what you just did. So it's not like somebody could steal your data. Okay. So I have that backup always there. I can go online and restore to the last time I synced. So that particular software is only $12 a month. Worth every penny.
Yeah, I bet. The last thing you want to do is have to rebuild your accounting file. I mean, that's insane. Yeah.
It also allows her, with her remote customers who are also on the QBox, everything that they do in-house gets synced back up. She can access it and work on her files from her office here.
Yeah.
And when she closes it, it syncs it up, and they have the information that's updated.
It really is nice. It changed my world a lot when I switched out. When they first came out with it, it was like, when I first heard of it, it was like, wow, this is awesome. I mean, I don't have to take a thumb drive, because that's what us accountants were doing. We're taking thumb drives on site taking a backup of the client's file and taking it back to our office working.
And those are temperamental too, like, right? Spill a coffee in your purse, it's over.
It was back then. I refused to use QBO because it was not ready. They released QBO way too fast. It was not ready, and it wasn't the desktop. The desktop is still, us accountants have a love affair with it. It is the most wonderful piece of software out there for cheap money for small business. It's nice.
Yeah, and I think you're bringing up a really good point, and that is if you are going to work with a bookkeeper, make sure that there is some way for them to either log in online. Like I use PC Anywhere. It's not my choice of programs, but that's what my bookkeeper's used to. So just know that you're going to have to probably sign up for some kind of level of remote, especially now with COVID and everything, having some level of access to your desktop remotely to help your, so that your bookkeeper can log in online or go see some other accounts like she does. Sometimes I need help filing my taxes, and so she can log in online using my computer and, all my accounts and stuff like that. It's already in there. One of the other things I use, and I'm not sure if you've ever heard of this before, but I use Trello. Have you heard of Trello?
Yes, I have. I don't remember. I heard it on Process Street, but I don't, because they were raving about it at one point in time. And I can't remember what kind of software it was, though. I just remember the name. Yeah,
Trello is what they call a Kanban board. It's kind of a weird name. I'm sure it means something.
Task management?
It can be used for task management.
That's what I was using, I think.
I basically think, like, I use it as if something were to happen to me tomorrow and Ross needed, who doesn't want to touch any of that stuff or doesn't know what the logins are or anything, it's kind of like my little safe box for how the company runs, right? Where's our account? How do we log into it? How do we order powder supplies? How do we hire an employee? How do we, who are our leases under and stuff like that. So it's kind of houses and tasks at the same time.
I was using that when I was building Quick Academy. Yeah.
Yeah. So, and also you can share it. You can share boards with other people. So for instance, I hired someone to help me with the social media, and I'm just sharing one board with her, right? So she's not seeing all my boards, like my financial board or anything like that. She's just seeing the social media board so that she can see what she needs to do. And stuff like that. So it's really useful, and if you do it right, you should just be living on that platform because everything is sort of like the hub. It's hard for me. Sometimes I just use it mostly as a storage facility for passwords and stuff like that. It's just a convenient place to put everything because prior to that, I just had everything, passwords and stuff in a book. You know what I mean? It just wanted to get rid of that. So I use Trello, but there's lots of other, like we're talking about different kinds of software. But let's talk about like other kinds of software outside of QuickBooks. There's Xero, right? Is that one?
Xero, yeah. I am a certified partner for Xero. Xero's a little more complicated, but it is a lot more. It's a step up. Yeah, it's
really
a step up in power. Yeah, you can do a lot more things with it. It has its limitations. I mean, they are I think it's either Australian or New Zealand company, but they're now located in San Francisco. They have an office in San Francisco.
Oh, it was UK, but
no.
Right.
And
they're sophisticated in the sense that their reports are better.
You can create reports in it, like design reports. It's
wow.
So it's nice. Xero's philosophy is that you cannot do it alone. So they allow the user, the business owner or the business itself to have certain things accessible to them. The rest is accessible through the accounting firm. Okay, so like one of the things that bugs me about Xero is that I can't get percentages on a balance sheet or a P&L without dumping it into Excel and calculating it myself.
Oh, wow.
Unless I use the partner portal. Okay, so that's me. I can go in and I can create a report that provides what I need. That's just kind of, I don't know, kind of hokey.
Yeah.
I think that's kind of hokey. I mean, really, you should have percentages on every single report if you want them.
Yeah,
You should be
business
able to
owners
click a
should have
button.
that.
Yeah,
Right.
and you know.
I think they're kind of assuming that everybody's going to have an accountant working for them all the time. And that doesn't happen.
No, it's not realistic.
What
I
is
mean,
it?
we kind of ad hoc.
About 80% of the businesses in the United States are what they consider small businesses. And that's up to what? What's the $1 million range?
Oh,
It's up to like
Small
$5 million.
business is 500 or less employees. It's still small business.
Yeah.
Or is it 100 employees or
it's-
less or something like that is still considered small business?
Small to medium is 500 or less.
Yeah.
That's a big place. I mean,
Yeah.
in my real job, when I'm not in the shop, I work for a trucking company, and they have like maybe 600 people. You know, that's a big, pretty good sized carrier.
Yeah.
But when people think small business, they don't really look at a carrier like that and think, well, they're just outside of the range of what the government thinks is small business.
Oh yeah. No, we're like micro small business. That's who we are.
So as far as that software is concerned, yeah.
There are some pitfalls.
There is one other thing my CPA told me, because I take my taxes and I don't do taxes. I can't keep up with them. And they have the software, and it's very expensive software, so it's not worth for me to do it. So she told me that they now have a rule with the IRS that says they can ask you for your QuickBooks file, which is a disaster for any CPA firm if the IRS were to say, well, we want your file. Well, no, you have to do the discovery part and tell us what you want to see. Well, they bypass that. So that is the biggest weakness as far as I'm concerned on QBO and the desktop. Okay, so she uses Sage 50, which is called Peachtree. I used to use it when
Okay. Mm-hmm.
Because they can't request it. Xero, they can't request it with Xero. QuickBooks is the only one they can. It's not fair, to be honest with you. It leaves,
So it doesn't matter. I got it on my desktop, and they can,
they can
just request it. But we got audited back in 2014. Actually, I did. Was my company, wasn't the powder coating company. I made a lot of money that year. I didn't make a lot of profit, but I made a lot of money. And it was crazy having to go through that process. I mean, it was, on one thing, it was like, I don't want to say it was enjoyable on any level, but it was definitely educational, like what you have to go through to prove an audit. You know what I mean? And in the end, I ended up getting money back.
That's cool.
Because I proved it so well, and then they realized that I actually had that, so they realized something else was not enough, and I ended up getting like $2,500 back, which, I guess in terms of time that I spent, I spent at least that much money and time on my effort trying to, and you have to break it down to a kindergarten level. I mean, they literally want you to see, they want to see this and then this and then this, and it was just over 2 silly subcontractors that I'd hired that year. They wanted to see the invoice and the check, and stuff like that.
Right.
What's that?
And the 1099?
Yeah.
Yeah.
Which I had, I mean, I don't even know what kind of made them, I don't know. I guess I got red flagged or whatever. It wasn't.
There's a lottery every year, and
Maybe, yeah, exactly. There's probably
percentage points of people. Yeah. Otherwise, it's if you make $100,000 a year or more on your top line, you have a higher risk of getting audited.
right.
But that's only for the remaining, 2 or 3%. So I think they audit. Oh yeah, saving receipts, save everything. Save everything.
Yeah, that's another one that we should talk about too. It's like, do you recommend all this like scanning and stuff like that? I mean,
they want the original receipt. They will not accept a scanned receipt. You need to keep the original. Don't throw them away.
yeah. Some of those like food receipts always fade out. You notice that?
They do. So what I do is I make a copy and I take my original to the copy. We used to do that corporate. We had 100 people who had expense reports. And we used to do that because we couldn't take the risk of maybe, because it hits the sunlight and or somebody uses a highlighter on them. That's a really good one because they'll fade in days.
Right. Yeah.
Stored in an area that's too hot.
Yep.
Mm-hmm.
So make a copy of it, but you still have the original. So they can actually see the original next to the copy.
Okay.
It's just
that's a good strategy. Yeah.
The extra few minutes it takes to do that.
Mm-hmm.
Plus, it makes them easier to organize.
Yeah.
Because you put them on a regular sheet of paper.
A lot of it.
Mm-hmm.
Yeah.
He does a lot of it. While I was watching TV or listening to videos.
She'll get a new client that comes in with 6 shoebox full of receipts. And I will sit down and at the kitchen table and I'll put them in chronological order. And then I'll take a bunch of copy paper and I'll put the receipt on the piece of paper and I'll tape it to the piece of paper. 1 receipt per page.
Oh yeah, and you can't put
the
tape can't go on anywhere on the print either because that'll fade it real fast.
True. There's lots of acids in tape.
But then they're stacked on a piece of paper. And you can you can bind them, put them in a binder. You can put them in a folder. You don't have this big clump of little bitty receipts down at the bottom that you can't figure out.
I can't work with those. I can organize them easier. It's actually faster than if I were working with those little pieces of paper. It was driving me crazy in the beginning. I could figure something out here. And taping them to the paper and having the copy to look at made it so much easier. And I can write on the copy if I wanted to.
Oh, that's Mm-hmm.
And say, well, this is actually this, or, I'm charging this to this and that. And I mean, it's simpler. We used to do that for a $25 million business. I mean, it just made sense. And then you don't lose anything because, those little pieces of paper, they fall off. And they're all in one place. And, this is not really, what is the word?
OCD.
OCD, yeah.
It's a time saver. It is
when you're audited, because I had to go back and, I mean, that's what made it so hard was, trying to find out, we had to prove like our assets and stuff. And so like, the compressor and, they wanted to know some of Ross's fixed assets. I think the only thing we got kind of, Ross wanted to write off his motorcycle and that didn't work. They did not.
Nobody can take mileage if
it can be done and I'm going to do it.
Yeah. So even though he had powder coated some parts on there,
but he can take mileage.
If it was under Maui Powder Works, but it was under his name, so that's
Are you an LLC or an S corp?
LLC.
Why are you still an LLC?
I'm asking myself that question a lot these days because we're about ready to launch the patina powder coat, and I'm thinking we're going to need an S Corp here pretty soon.
You can't pick a better time. It's only what, the 5th of December? Is it the 5th? Yeah, it's the 5th. You got 26 days to do it and start January 1st as an S Corp. The one thing
January
about
1st of 2020.
2021.
Oh, yeah. Not backdated. I'm sorry.
So you can't retro, you're saying I can
You can't
change it to, huh?
You have to do it. You have to submit the application to the IRS when they.
Oh, okay. So that's a good point. So like if you're going to make a change, you want to do it at least at the very latest December, so that when you start your calendar year in January, you're not transitioning halfway through the year. Very good point. Very good point.
Because then you have to file 2 tax returns.
Yeah, I don't want to do that.
No, nobody wants to do that. But an LLC, you have to pay the self-employment tax. Okay, the 15.3%.
Yeah.
In an S Corp, you only pay this. You pay it because it comes out of a paycheck.
Right.
But you get other benefits, and it works out a couple. Just on mine alone, it's a few $1,000s a year I save.
Wow.
I had my CPA give me I want to know what I'm saving to go to an S Corp.
Mm-hmm.
Because as far as I'm concerned, the tax return's more expensive. So what are you saving me?
Right.
And so it does save some money.
But you're having to file more to taxes. You have to file personal now if you are corp, right?
Well, you still have to file personal anyway.
Well, right now we kind of roll it all into the 1040 and then profit and loss. See, Schedule C.
It's due March 15th instead of April 15th. Yes, it is a separate return. I've seen them charge anywhere from $400 to $700 for that return.
Okay.
Then you have your personal return, and it comes through onto that return, the numbers that are generated by that. It makes it a little more complicated, and it's honestly a really dumb thing for the IRS to do. I don't know why they don't just put it all April 15th, because the CPAs trying to get those things out March 15th, they're running like chickens with their heads cut off.
Yeah. Yeah.
No, because everybody comes, because not only are you got the personal stuff, but now you got this short window of time to get these small business owners to get their S Corp paperwork in. And that's hard. Some of them aren't even finished wrapping up.
Well, that's something to think about then. I'll have to have a conversation with Ross. Okay, so let's break it down into some, let's see what, okay. This is a good one, going back to talking about QuickBooks and setting up QuickBooks. I didn't do it right, as we discussed earlier, how it's like it gives you have to pick a certain business, and then, you don't fit into any of those categories being a powder coater. So where do you start, right? So
you're a manufacturing firm, I would consider. Yeah.
I used construction, so I shouldn't have done that, but that
works too, but it's a little more complicated. Manufacturing is complicated. You can even go in as a service, okay?
Right.
It's basically a service, but you have different components, but the chart of accounts doesn't make that much of a difference, okay? They're going to lay it out in a certain way. You have to customize every one of those files. You can't just run with.
And now I have a bunch of files I don't even use, so I have to make them inactive and stuff, for service categories, like what we're, like in the chart of accounts, like this is where I have a hard time, because we do a lot of RIMs, right? We have personal projects, people, whether it's a table or a chair or, anything else, just miscellaneous stuff. Then we've got like gates and railings. How do I, being that we do so many different kinds of projects, is it, there's resto projects, then there's new construction or new custom,
welded stuff.
How do we break that down We don't really need to, it's not.
You want to know the cost of that particular project or job, or how do you break that down in QuickBooks? Do you charge it to inventory or cost of goods sold? You're going to charge it all to cost of goods sold and do a physical inventory at the end of the year. And, you know, yeah, they're going to be open boxes of powder that you're going to have to say, well, there's half a box here. It cost me $45. I'm going to have to take $22.50 and put it to cost of goods sold. And the other $22.50 goes into inventory. So, yeah, you have to have a little bit of a complex inventory, but it's really not that bad compared to like real manufacturing where you have to put in labor and overhead and everything else. So it's when you purchase something, you want to charge it to cost of goods sold. You are required by law every year at the end of the year to do a physical inventory. So because you need to be able to adjust to prove it to the IRS if you're ever audited. So you have to do a physical inventory. And those are the things that you purchased yourself, not client parts that come in, even though you're responsible for them, okay? Things that you purchased for the business, you have to have a value on those for inventory. And that is only, not fixed assets, I'm talking strictly things you purchased to produce your product, okay?
Sanding discs, chemical stripper, media.
I would consider those shop supplies.
Okay.
You know, unless that's all you do.
General supplies,
and you
yeah.
have like, you know, $1,000 worth or a couple $100 worth of it. But you're going to go in and you're going to say, okay, I have all this powder at each, you know, box. You can put a little tag on it and say 12/31/20. I estimated this to be worth $35 because I know the box cost me, let's say $50. I don't know what the powders cost. We haven't
55
discussed
pounds,
that yet.
200 plus. Theirs cost is a lot more because they got to ship from the mainland.
Okay, so let's say so $200 is a full box. I've got a half a box here. This value on this box is $100. Now, you think it's crazy? You go into these stores, you go to a real retail store, you know those little inventory tags that they have. They have to do that for every single item. It's not just to see what they've got on stock so that they can, you know, put it out.
Right. It puts value on what they have. Yeah, exactly.
It's so that they know at the end of the year.
I used to hate that. January was inventory month. I hated retail for that month alone.
Because unfortunately, it's not deductible on your P&L in that particular year, whatever's in inventory. It just kind of sits there. It's money you spent and you put it there, but you haven't used it to produce product yet, so it has to sit there until you use it.
But can't you just mark it all as cost of goods and have your customer absorb that cost?
Nope.
I mean, outside of black and white and primer, and maybe a handful of silvers or something like that. We have our in-stock powders that we're advertising as in stock, and we could mark those as cost of goods. If we have like a bronze that comes in for some architect chose this bronze for this job, and we don't use it all, say we have to order like 20 pounds or something like that. We don't use it all. I mean, it's absorbed through the business. I have to charge my client for that box.
That's fine.
So
you charge the client for the box, but you still have the remaining powder that you can use for something else.
Exactly. That's my point.
When you can use that for something else is when you can.
But why even acknowledge that in the first place? Because it'll be Ross's choice if he wants to charge the customer for powder or not that time. Most of the time we try to, I don't know. I don't know. This is kind of an interesting way. I don't how custom coders charge for powder. But we double, triple charge sometimes just
Well,
because it's there. We can.
The rules of the game for the IRS is if you purchased it to use on the product and all of it's not used. I mean, I'm not talking like that much in a box. I'm talking a significant chunk of money. $100 is a significant chunk of money. You can't cost that out because it becomes a tax deduction, and you can still use that product on something else. Now, there is one way you can, and that is if it's sat on your inventory shelves for a couple of years and it is considered an inactive part, you can write it off as no cost. Okay, as a no cost inventory item. So it'll sit there at no cost, and you can charge cost of goods sold. But if you ever use that, you have to be able to prove that you can legitimately do that.
Isn't it better just to ignore the whole thing and not even do inventory? Like, can't you just...
You know what? You can do whatever you want. I'm telling you the rule.
Yeah, no, I get that.
The rule
I
is...
wonder what other powder... I'm going to put it out there. Like, what are other powder coaters doing with their powder?
Sure, a lot of them aren't following the way they're supposed to do it, but that is the truth. Now, if you have that much powder, it's not a big deal. You got a half box worth $100, it is a big deal. I used to work at a manufacturing firm. We had like some of the teeniest, because the oscillators were about that big. All the little tiny parts that went on that thing, we had to keep those in inventory until they were obsolete. Every single tiny little part. We had thousands of them.
Yeah, I don't know. Like, this is kind of an interesting...
As long as you still have the product and you can use it on another item, you cannot cost that out.
The thing about it is, if you're ordering it for the customer's paying your price for it. You're paid for it, and your cost is covered.
Right.
So if you have 5, 10, 15, maybe 20 pounds sitting back on the shelf and you got to wait until next year to use it, well, it's already paid for. It's not costing you anything to hold on to it. Another job comes in and you can use it on that job.
Yep.
You can charge that as cost of goods sold, and you're getting the benefit of the deduction.
By accounting for it.
Yeah, by accounting for it.
Yeah.
So it's a process to follow that does pay you back in the end. In most cases.
It really comes down to a technicality. What year do I put this tax deduction into? That's really the technicality. Can I put it into this year? And if I can't, it goes into inventory until I can put it into a subsequent year.
So
either as a write-down for inactive inventory, obsolete inventory, or I used it.
But with powder, manufacturers are telling you shelf life is 6 to 8 months.
Well, if that's the truth, then 6 to 8 months, you can write it off. If it's no longer good,
and that's within the year, then that might be the solution there.
Maybe, except for if it's September, it's not quite 6 months, is it?
I see what you're saying. Yeah.
You, as you grow, it may not matter to you right now, but as you grow, it'll be worth thousands and thousands and thousands of dollars. Now you get an audit coming in the door, you get whacked. You'll get whacked for that. You'll get whacked for penalties and interest. Why is it worth that? It's not.
It's not.
It's
but
worth.
I had never considered it before. Like,
nobody does. Nobody does, because
I just thought I'd ignore the problem.
It's not a supply. It's inventory. Your powder is inventory. Little things maybe like, throwaway gloves. Nobody tracks those things, or, but your big things, your powder. What else is do you use, like big things? That pretty much that's it.
Most of it's going to be that's
most of it's
product. Everything else is going to be
unless you buy maybe some sort of, like a quantity of some sort of product that you're going to powder coat and then sell the whole product. Okay, like
Right, that you're cutting, you're making a product and you're putting powder on it like a manufacturer, like, yeah. Mm-hmm.
Right, and then the product also goes into inventory until you sell it, and then it goes into cost of goods sold, the entire thing.
So how do you propose then, if powder coaters are supposed to inventory powder, how are you supposed to do it? Just get a scale, get a clipboard, write the powder name and number down, measure how much is.
I don't think you have to get that exact. I'd say I have a half a box, I have a quarter of a box.
Okay.
I have a third of a box. You know, I mean, we're talking little dollars when we're talking. You don't have to go that.
But you do have to write down how much you paid for it, or how is it just that you're, because you're.
You have to have an inventory at the end of the year, because the IRS, if you ever audit it, that's one of the things they'll say, you'd like to see your inventory. Because the opposite of inventory is cost of goods sold. So it's going to go into costs, which is a tax deduction. So they're going to want to look at that. That's one of the big things. One of the other big things that they look at the most of is meals and travel, mileage.
Travel, yeah, we got dinged on that, but then I ended up proving otherwise on that one audit.
You know, a lot of people just say, well, I drove 10,000 miles. Oh, no, you need a log or a mile IQ. Mile IQ seems to work for a lot of people. I have my log. I'm probably losing miles because I'm not necessarily putting in all the stops I made along the way to pick up office supplies or, you know,
right,
the business on the way. But I'm happy with it, doing it that way, because I don't travel that much. I stay in my office most of the time.
Well, Amazon certainly makes it easy to order office supplies without having to go anywhere, right? Solve our problem there.
They do, but there's always the last minute. Oh no, I forgot to pick that up. Yeah.
So, you know, let's get into estimating restoration jobs. We're just estimating time, labor, powder to a job. I mean, Ross he just has some magical power where he can just look at a job and know right off the top of his head, like how much that job's going to cost. He even mentioned it in, I think, one of the earlier podcasts we did on knowing your worth. There's a guy on a show, I'm not sure if it's Discovery or History Channel or whatever, where they go and they do all kinds of restoration projects and stuff. And the guy, and the guy is just like Ross. He's very good at just looking and spying something and just like, it's going to cost you at least this much, right? But it's not that easy when you're not that good at it, or you just draw a blank when you're looking at something.
That's one of those things where experience is your teacher.
True.
If you have, I'm going to relate this to powder coating, but it works in other ways. If you have something that's similar, or something that's similar size, say somebody brings you a piece that you've never seen before, but it's the size of an intake manifold, and you charge $125 to do an intake manifold. You figure your powder and your time and everything else is going to be about the same. So you relate it to what your experience is. And also, when you're doing things over and over and over, I got a set of 18-inch wheels. You know what that's going to cost you. Construction jobs are the same way. You know, I want to build a 10 by 10 barn. You know what lumber costs. You know how many hours, how many people it's going to cost you to, in labor to put it up, and you can give the customer an estimate. So it's just one of those things that you have to practice to get good at. Since you did restorations before and you were in the painting business and things like that, all that experience that he has come into play, and that's why it's so easy for him.
I always kind of challenge him because, like, I'm the QuickBooks queen, and I'm thinking you can pop that stuff into a QuickBooks and have it, if you get it done right, when you set up the category, and I may not be saying that right, but like, that service, you should be able to have that already. And I know there is that debate on linear foot. That'll always come up in the Facebook groups. I've got these parts and I got this much linear feet or square feet or cube feet or whatever, and I think that it should just be used as sort of a checks and balances, right? Because you've got it in your head, this is what you want to charge, and then you go to your QuickBooks and there's a formula in there, or there's a, 1 foot equals XYZ, and it's a way to kind of double check it. So I think having a way to double check, especially restoration jobs. And this is something that I didn't consider until we interviewed Jeff Taylor on episode 15, where we were talking about rust and analyzing rust and all the different specs on how severe rust is or can be when you're looking at a job, like a rim job or a railing job or whatever, and that should also calculate into your estimation price, because it's going to take longer to blast it to that NACE level or that white metal level, right? And stuff. So that was a new kind of insight that I didn't have before when estimating. There's lots of factors in all of that. And I think that that's going to be one of those like continuing debates on charging enough. And then you've got your competition down the street that's doing it for half price, whatever,
Well, if you've sat down and figured out what it's going to cost you to do it, and you're putting an estimate out on that, and the guy down the street's doing it half price, you feel real comfortable in the fact that he's losing money.
Yeah. That's what I know.
And there are a lot of guys who do the undercutting thing, and then what happens is they end up going out of business after a while.
Yeah. Well, they'll cut their cut. They'll not cheat, but like they won't do the level of restoration that you think you're getting.
Right. Yeah. So you let them do it. You just keep selling your value. What is your value? Your value is your quality, your art.
Yeah.
They can't do the same thing. Go take a look at what the work this guy does, and then come back and see the work I do.
Right.
If people figure it out, they end up figuring it out. And who was that? That was the guy who did our driveway, was telling us about the guy up the street doing the same thing to him. He was what would you call his type of work? It wasn't construction, but it was, he laid sidewalks and like he did.
It was concrete.
Concrete.
Slurry. Yeah.
He was a concrete contractor.
Mm-hmm.
He poured driveways and foundations and stuff like that. So.
He told us that. And the guy eventually went out of business. But unfortunately, everybody else around who's struggling can't seem to find their footing. And your footing is in your quality, in your value, in your service. In
your systems.
In your systems. It's all about systems. Yeah.
Mm-hmm. Yeah. I think that's what makes America so strong in that sense. We're all about systems, right?
Yep.
Yeah. Let's see. We kind of covered cost of goods and expenses and what the differences are. I think we clarified that pretty well. I think we kind of covered it all.
I think so.
All those reports, review, profit, loss. Yeah, I mean, the
3 weeks, you gather questions from people because they're going to have a lot of questions. And everybody has a different question for their own different business. And we could get together and answer the questions. But other than that, really, basically, it comes down to you need to get somebody in there to set you up and teach you before you get your hands in there. And then have somebody check it out before you do your taxes. But you need to know the basics.
Do you have any checklists for tax, end of the year tax stuff? Like, make sure you reconcile all your accounts, or you do this or you do that. It'd be kind of cool if we had like some kind of a checklist for people to go through. Maybe we could pop it in there as a link or something.
I have this thing, called it's Let's Get Started, the rules of the game, and I do give that out when I sign somebody up, and we go through it. It's like 15 pages long.
Okay.
And we go through each and every item, what to know, what to track, what to keep, just everything I could think of. I threw the kitchen sink at it.
Yeah, I mean, I think for the most part, powder coating, the business of powder coating is kind of a pretty straightforward business. In terms of it's very clear cut as to what is a cost of good or what is an expense. Some businesses kind of not so much. I mean, I'm happy to be doing bookwork for powder coating versus contracting. I mean, those guys just buried in paperwork. And that's one of the reasons why we got out of contracting and construction and remodeling and stuff. I spent hours just making copies. One for my owner, one for me, files here, files there. It was just nuts, aside from all the facilitating and scheduling and stuff like that. So
construction and manufacturing are the most complicated, and sometimes software. Yeah, the software development.
Yeah, I'm in all three. I'm in all three. How crazy am I? Yeah. Well, but
powder coating really is actually it would be simple to teach somebody, as long as they have the desire to learn and the desire to really do it. And not just because they have to, but you really have to want to know the logic behind it, because the logic behind it is actually going to be used in your business to help you grow. And that's why you do it, really. Accounting is not about taxes. I know everybody looks at it as, well, it's because I have to file my tax return. It's not taxes at all. You get an accounting book, and it won't barely even talk to you, I think, about taxes. It's all about the logic and the language, what it's trying to communicate to you. It's speaking to you.
Yeah, that's a good point. And, what you give your tax guy and what you need for your business in order to make a good decision are two different things.
So it's all created by politicians, and politicians are not logical. Yeah.
Never more important of a statement than now.
Yeah.
Well, that's awesome. Okay, so let's wrap this up and let's put out how do people get a hold of you? Are you helping people with their powder coating business? Are you just doing all kinds of businesses?
Right now, I'm as far as my regulars are concerned, I'm pretty well booked. But I still am doing training. I do like half-day sessions. And if they want to send me an email, my email address is Linda at plus, that's PLUS, side, SIDE, profits, PROFITS.com. And I'll get back to you and just tell me what your needs are. Tell me what you desire as far as, what you need for your system to get up and running. what you need as far as consulting or whatnot. So I'd love to hear from you. And then what we do is we take it from there. I design something that fits you, not give you something that fits me.
Okay.
Okay.
So so do you do it in a webinar kind of thing or like a Zoom meeting?
Zoom meeting type thing, yeah.
Mm-hmm.
Online.
That'd be cool.
And it's good because I like it best that way. I've done in-person trainings and I've done online trainings, and the best is online because you can have your hands on the keyboard while I'm telling you what to do. And then you get that hand-eye thing going.
Kinetic learning.
Repetition. Yeah.
So true. Yeah. No, that's great. Maybe the three of us can get together and create a couple of two.
I can't teach anybody to do anything on the accounting.
I got to teach him.
You can click QuickBooks and open it up on your computer.
That's my
level of expertise.
And Linda will take it from here.
That's right.
Yeah, maybe we can get together on some webinars and stuff. Just maybe taking a blank, ABC powder coating and creating a webinar on how they would do that, and just put it out there,
After tax season. I could do that. I could think about it after tax season. The next
after tax season.
4 or 5 months are going to be nuts. Yeah.
So,
but the trainings are always, I can always squeeze them in between things, which is nice.
Yeah. So just to wrap up, the key takeaways are the powder inventory and what to do about it. If you're going to change your tax strategy or your corporation, if you're going to change your business model, whether it's going to be LLC or S Corp, now's the time to do it, not next year, because then you'll have to file 2 different kinds of taxes. So now's the time. And
your CPA about that. Yeah.
Yes. Start with a CPA. And if you're, thinking about getting a commercial space or making strategic decisions or maybe grow, because a lot of people listening are growing their businesses right now and thinking about these things, right? Is it time for me to get out of the garage? Go see a CPA and just have a 1-hour meeting or a 2-hour meeting and say, these are my needs. Can I make this happen? And they'll be able to.
They're organized, prepared, know exactly what you're doing to do, so you maximize your time on it.
I'm going to interject this. CPA, not H&R Block, not Liberty Tax Service.
Good point.
Not Olga down the road that does my taxes.
There's a big difference.
H&R Block, Liberty Tax Service, those people, and I don't say this as a pejorative. I really don't. But those services, they put your numbers into a software. The software does it for them. They are trained to use the software. They are not trained to know tax law. They don't have to know tax law. CPAs do continuing education every year. They put the time into it to learn it.
And the reason that you want somebody like that is because on a personal side, when you're doing your taxes, not a big deal, okay? For a business, when you bring them in these reports and you bring them up in all this stuff, they would never be able, somebody at H&R Block and those kinds of training programs, because I think those are like 8 or 12-week training sessions. They don't teach them accounting. They teach them taxes and how to put them into the system. But if you bring your stuff into a CPA, they will see if something's wrong. They will know, hey, wait a minute, and they will ask the questions and maybe save you thousands of dollars. And believe me, there's not much of a difference in price between the two. If you go to the bigger firms, you're going to pay a lot of money, but you go to independent CPA, there's like 1 or 2 people in the office. A lot of them are very good. And affordable.
Yeah. And I think the final thing that we established was profitability, that you should shoot for 10 to 15% profitability, that It can be done. Of course, everybody's financial situation is different, but for the most part, you should be shooting for at least that percentage every year or every month. So I think that's a great way to wrap up the show. I think that we'd really like to hear the listeners about what they think of the show. Like, is there something else we could cover on a future show? How do they set up their inventory? Some tips on that. I mean, we've been getting a lot of comments on the YouTube channel and stuff. So I think that's been a really great avenue for people to kind of post their comments, is to go to the YouTube channel and just type in what they think or what's worked for them, what's working for them in accounting. What accounting programs are they using? QuickBooks, Xero, Peachtree, manual, manual systems, whatever. I mean, let's hear it from them, what's working and what's not. So thanks so much, you guys. It was great to meet you finally and in person.
Just reminded me, can I say one more little tip?
Yeah.
If you don't know QuickBooks and you can't find somebody, or you can't do it right now, do it with pen and paper or Excel or something like that. Just do it. Just get it onto something. So, because your memory, you lose your thoughts, and you lose what you paid for this and where you bought this, and the fact that you did buy this, and it costs you money.
What's that say?
Let's go Peaks.
Go Peaks.
Okay. That one's around my head.
It's over everybody's head.
Okay.
Or
inside joke.
Thank you very much for taking the time to interview us. And really appreciate it. Looking forward to watching some of your videos. Haven't had a chance yet, but I will.
Don't worry. We're covering lots of subjects.
I've watched them all.
He has watched them all.
And you've got the comments to prove it.
Yes, I do. Yes, I do. Thank you so much, you guys, and have a wonderful day.
Good luck to you.
Thanks, Kim.
All right. Bye.
Bye-bye.